several years ago, I bought some Bitcoin, but then I sold it. You see, generally, I want to trade in and buy and sell assets that generate income. But recently, these new Bitcoin ETFs, they make it super easy to trade in it. And as a result, I've started trading in it again. In this video, I'm going to share with you how I've been trading options in these Bitcoin ETFs to help you decide if it's the right fit for you. Although I love trading in companies that generate consistent income, one of the really nice things about these Bitcoin ETFs is that there's no earnings. So whereas in my stocks about 4 times a year, I try and get out of the different positions that are about to announce earnings, I don't have to worry about that when it comes to these Bitcoin ETFs. And because of that, I don't mind making it a small part of my portfolio. Although they don't have earnings, they have something else. They have a tremendous amount of volatility. And you're gonna see that in just a minute when I talk the charts on the trades that I did. But because that volatility is very important, you position yourself correctly so they don't wipe out your account. So the question is, how do you successfully trade in these Bitcoin ETFs so they don't wipe your account out? Well, here's how I'm doing it. Before we dig in, let me ask you, are you currently trading in Bitcoin? If so, how are you doing it? Are you using any of these Bitcoin ETFs? If you are, which ETFs are you using? I like to hear what you're using in your current trading. So please let me know in the comment section below. As a lot of you know, if you watched my channel before, I trade a lot of options. I do trade a lot of stocks and ETFs, but I also trade a lot of options. So why are options a good way to consider trading in these Bitcoin ETFs? If done properly, they can only give you some protection or a buffer or margin for error when you're wrong, but they can also set you up for some nice wins. Trading in just Bitcoin or the Bitcoin ETF itself is kind of like using a hammer to do some construction work. But once you know and understand options, it's kind of like using your whole toolbox to do a building project. But it's important to know how to use those options or how to use all those tools in that toolbox, because what you don't want is to be swinging a chainsaw around like it's a hammer. But if you understand how to use options when it comes to trading, especially in these Bitcoin ETFs, then it accesses that entire toolbox, which can actually make it safer for you to trade in it and also generate some awesome wins. You see, options, if used properly, can put the odds of winning in your favor, while sometimes, if done properly, it can actually reduce your risk. And options can be used to speculate as well as to hedge your positions. The problem with options is that most people skip learning about them. They hear about them and they just jump right into trading them. So it's important that you learn how to use them properly, especially in volatile ETFs like these Bitcoin ETFs. Before I talk you through the 2 Bitcoin ETF positions I'm in right now using options, let me give you a little bit of the lay of the land. This will be brief, but I think it's important for you to understand. There are quite a few Bitcoin ETFs you can choose from. The 2 that I'm trading in are these top 2. As you see, as of right now, I do expect this to change probably monthly, but as of right now, they're the 2 most highly traded coin ETFs. They are IBIT and FBTC. Expense ratios are nice and low. Their performance pretty much mirror each other. Their assets under management are nice and high. And here's a little bit about these 2 Bitcoin ETFs. Up top, we have IBIT. I'm gonna call it IBIT. I may be saying it wrong. I apologize if I'm wrong. I'm sure you'll correct me, but I'll call it IBIT. IBIT is an ETF that's managed by BlackRock. And BlackRock is the largest asset manager in the world. One nice thing about IBIT is that it provides direct exposure to the Bitcoin price movements because they hold Bitcoin against its shares. So you don't have to worry about owning those Bitcoin and storing them somewhere safe. BlackRock does it for you. And most of you have probably heard of them. It's actually a stock that I trade in. So it's a really well-known and well-established company. FBTC is also managed by a very well-known brokerage, and that's Fidelity. Whereas BlackRock has 11.6 trillion under management, Fidelity has about half that at 5.8 trillion. But that's still a big number. I think you'll agree with me on that. Now, like IBIT, FBTC, it directly holds Bitcoin against its shares. And if you want a snapshot of a side-by-side comparison of them, here are the 2 stacked up side by side. One thing that really stood out to me is just the max drawdown was very similar, pretty much exactly the same. The Sharpe ratio, exactly the same as well. And the 1-year performance was just extremely close. To me, it's exactly the same. Then as of today, the 2 expense ratios are the same at 0.25%. So basically the same ETF, just 2 different companies. Because of that, I'm willing to trade in both of them. But one nice thing about IBIT is that it does have higher volume. So if you're going in and out of options, it might be the one that I would lean more towards. As you're gonna see, I'm trading options against both of these ETFs. Now let's get to my favorite part of the video, that's talking about the actual trades. Here's where I'm going to show you how I set up my option trades against these 2 coin ETFs. Let me get myself out of the way here. See, these ETFs, they're not very old. They started back in early 2024, and that applies to both of them. So we don't have a lot of history, but we do have some nice history, enough to see some technical analysis in them, which is what I want from trading an asset that has no earnings. You see, an asset that has no earnings, well, the only thing you have to go on is price movement, which is pretty cool. You don't have to worry about all that other stuff. So here's the price movement that triggered me to enter into option positions against FBTC. Now, as I zoom in here, I'm going to show you the exact trade, how I did it, and why I did it. So you see that going back several months ago to January or February this year, FBTC began to decline. It declined around, what is that, about 30%? It's a pretty big decline. Keep that in the back of your mind. These things are volatile, as you're going to see here. And then just for the record, it's up since that time 45%. So again, volatility big time in these ETFs. That's why I think price movement is so important to understand if you're going to trade in these ETFs. So what was I looking for when I sold these cash secure put options against FBTC? Well, you see the trend line I had drawn before I did that trade. I was waiting for FBTC to break that downtrend. Here you see it did that on April 14th. Had this nice little doji candle. The next day it came back down and retested that diagonal resistance and support line. It found support there. The next day, same deal. Tested it again, found support there. The next day, the same deal. Found support there. At that point, it began to break out. It broke through this green 50 moving average on this daily chart. It's actually on this day, April 21st, I sold my first cash secure put option against FBTC. The next day, when it broke through this horizontal support, I sold another one. But that wasn't all I checked when I entered this trade. Remember, price movement is everything when it comes to these ETFs because there are no earnings. So on the day I did this trade, I was looking at something else. I was also looking at the 15 and 60 minute chart. Now I've zoomed into the area where I did this trade, and this is the 15 minute chart. What I was looking for is not only for it to break that downtrend line, which you see it did here, it then found support right around that trend line, but I wanted that downtrend to reverse. I wanted FBTC to make some higher highs and higher lows. Here we see it did that right here on the 21st. That was the day I did my first cash secure put option against FBTC. Then the next day it broke again higher above this horizontal resistance line and therefore made a new higher high based on the previous one the day before. So I did another one. So I wasn't just looking at that daily time frame. I looked at the 15-minute time frame and also the 60-minute time frame. And here you see the same thing on the 60-minute time frame. Notice it broke through that downtrend and made a new higher low here, made another higher low here right before I did that trade, and again made a new higher high here and here. So overall, we had multiple time frames lined up, all agreeing that it had broken its downtrend. Here you see the first trade I did on April 21st. I sold to open the FBTC, the Bitcoin ETF, June 20th, $60 cash secure put option. Now, a couple things to notice here. This option I sold is about 2 months out from the day I did it. I like to sell my options between 30 to 60 days to expiration. And remember, this ETF was trading for around 76. So I sold that put option over 20% out of the money. Why? Because I knew how volatile this Bitcoin ETF could be. But in spite of that, I still received nice premium of $1.21 per share on a $60 strike price, 60 days to expiration. The next day on April 22nd, with FBTC pushing through again the horizontal support, I sold another cash secure put option against FBTC. I sold the same June 20th $60 put option and got 95 cents per share. At that point, that $60 strike price was even farther out of the money because FBTC was trading for around $80 per share. What's happened since then? Here at the yellow area, that's the days that we sold those cash secure put options. Since then, FBTC has gone way up in price. It's up around 18% as of last Friday. And what does our position look like? Well, on average, we received $1.06 per share for those two cash secure put options that we sold. And right now they're trading for around 35 cents per share. So overall, we have a nice profit. So you might be thinking, well, Randy, you missed out on a lot of profit. That thing really moved. And I will say, I did have a note to myself to do a risk reversal in it, but I just didn't act fast enough. By the time I remembered to do that, the stock was already taken off, so I missed that. But in my opinion, I did a really nice safe trade. With the stock trading up here, I sold the put option way down here. That was a price I'd feel comfortable dealing with FBTC at if it came to that. But because we have nice technical analysis skills, we put the odds of winning this trade in our favor. As you can see up to this point, we can close it out for a really nice profit. The next trade I'm going to share with you is the one I did in IBIT. It's the other Bitcoin ETF that actually has more trading volume in it. And we'll start with the 15-minute chart on this one. So first, overall, notice it was finding nice support at this upward sloping trend line that I drew here on this 15-minute chart. It was making nice new higher highs and higher lows, and recently it made a new higher high and a higher low. So this is the day in here when I sold this cash secure put option. Now let's switch to the hourly chart. Again, you see the same thing. A nice bullish uptrend, nice consistent higher highs and higher lows. That looked good. And now we'll switch to our daily chart. Again, you see the same thing. It broke through a downtrend, as you see right in here, pushed through that back on the 14th or 15th of April, and was now making nice new higher highs and higher lows. Now the one thing you might say, well, Randy, this doesn't quite look right, is that we're now nearing some resistance as you see here. I think it's a valid point. So here's why I did that trade. Overall, over the previous month, I saw really nice buying pressure. We see it from the candlesticks here, but also from the volume. Notice what's happening in volume down here as the stock price was going up over the previous several days. It too was going up. It was above average, which is this white line here. Because of that, I felt pretty confident they'd push through this resistance area. Because of all that support below it, I decided to sell a put option below multiple levels of support. So I sold it around this $50 strike price. That strike price was about 17% out of the money when I sold it. Well, what happened? The next day it pushed through that area. The day after it had a nice higher high candle. Now it's coming back down to retest this potential support area. At this point, I expect the odds are that it most likely will hold. Now, of course, that's not guaranteed. At this point, that looks like the most likely odds because it's right at this diagonal support line right here. It's literally right at it. It's also right at this horizontal resistance line, which once broken through should turn to support. So we'll have to see what happens when the market opens tomorrow, whether it continues to hold that support or not. But even if it doesn't, we're still really far out of the money. We're way down here at $50 per share, and it's currently trading for around $61 per share. And just so you see my actual trade, here's the pay trading alert I did. On May 20th, I sold to open the IBIT July 18th $50 cash care put option and got 92 cents per share. Now we're only a few days into this trade, but so far it's going good. Our average price after commission was just over 90 cents per share. When the market closed on Friday, it was trading for around 83 or 84 cents per share, so we're up about 10%. And again, notice a few things about this position. I sold the July options. So as of today, those options have about 53 days to expiration. It's like just selling options that are about 30 to 60 days to expiration. Now, what if you didn't want to sell cash put options? What if you wanted to greatly decrease the amount you have at risk in these really potentially volatile ETFs? How could you use options to take, let's say, a bullish stance in IBIT with a lot less at risk than $50 per share? Here's how you might set that up. Now, generally when I buy call options, I want to go with a longer time frame, usually a year plus. But let's say you didn't want to go that far out. You only wanted to go a month or two. Is that a good decision? And if so, how could you set that up? One thing to keep in mind when you buy an option is that time is working against you. And on volatile ETFs, like these Bitcoin ETFs are, there's a lot of volatility priced into the value of those options. That's great when you sell it. As you saw, we're selling options way out of the money and still getting a nice premium. But if you're buying them, it can be something that works against you if you're not careful. So here's how you might consider buying options against these volatile ETFs. First, I wouldn't even think about buying a 25-day option. Probably the minimum I consider buying is a 53-day, but I would actually go farther out than that. Let's say you only want to go out 2 months. Let's say you want to buy a call option that expires in about 2 months. We'll look at the July 18th call options. All right, so you see that IBIT closed about $61 per share. If we're bullish on it, we might consider buying, say, the $65 strike price call option. So you see it's trading for around $3.75 per share. So just keep in mind what has to happen in order for this option to be profitable at expiration. First of all, you're buying the $65 strike price call option. So it has to be above that. And above that by how much? Well, the amount that you paid for the call option, which is $3.75. So in order for this call option to be profitable at expiration, IBIT has to be trading above $68.75 at expiration. And that's if you do nothing with it, which is a lot you can do with it. But that's the scenario of just buying a call option. How could you improve your odds in this situation? Well, in addition to buying a call option, you might also sell one to help offset some of that time decay that's going to happen in the call option you bought. So how can we do that? Okay, so we could buy that same $65 strike price call option for about $3.75 per share. We could then sell, say for example, the $70 call option, and we'd get about $2.30 per share for that. So if you do that math, instead of being out of pocket over $3 per share, now we're only out of pocket about $1.47 per share. We have capped our potential upside. Our max potential win is the difference in these two strike prices, the $65 call option we bought and the $70 call option that we sold. It's about $5. But it's only costing us $1.47 for a potential win of $5. And if you do the math here, for the $1.47 we'd have at risk, we have a potential max win of $3.53. That's a pretty good risk to reward ratio in my opinion. It's about a 2.4 risk to reward ratio. So I do like that risk to reward. I just don't necessarily like this time frame. But if you're very bullish that IBIT would go up in price over the next 53 days, this might be a trade you want to consider. By selling that call option at $70 above the 65 strike price call option you bought, it helps offset some of that time decay. And here's what the P&L will look like on that position. So down here at the bottom, you have the price of this Bitcoin ETF. Then on the right side here, you have the profit and loss. The dotted line is where the P&L would be as of today if the stock was at that price. And the solid white line is where it would be at expiration. So here you see we have a nice risk to reward ratio. This is our risk down here. This is our potential reward up here. And then here is the profit and loss if you only bought that call option. Notice the difference here. You do have unlimited upside potential, but you have a lot more at risk. So ideally what you want to do is buy that call option at a strike price you think the option will be in the money at, and then sell the call option higher than that at a price you think the stock will not get to. That way you're getting some benefit by selling that call option that helps offset some of that time decay, but you're also able to maximize how much you might potentially win. And the reason for that is down here in theta. At the very bottom here you see theta. Notice this position will lose about $4.63 per day. And that's if you just own that one $65 call option that expires in a little over 50 days. But this gives you a nice way to take a bullish stance on these Bitcoin ETFs without having at risk that $50 or $60 per share like I have in my cash care put option. Now personally, I'm selling the put option because I'd be okay dealing with them at those strike prices. I'd then turn it into a poor man's covered call or do something like that, or just try to adjust the cash care put option. But if you didn't want to risk that much, if you wanted to risk $100 to $200 or $300, then buying a call option might be worth considering. But just remember, when you buy that call option or do that bullish call debit spread, you need the stock to move pretty quick in your direction. In this case, it needs to get there in under 53 days. The way I like to look at buying these call options, although I don't gamble at all, it's kind of like playing the lottery. You need that strike price to hit. You need to hit it within a certain amount of time. And if it doesn't, then it expires worthless. With the cash care put options, you could also buy a put option below the one you sold to give you some protection and to cap your maximum loss. There are ways to offset or decrease what you have at risk even when you sell those put options. Let's think through that scenario of you buying a call option or doing a bullish call debit spread. When would you want to get out of that position? Because remember, you don't want time to just go by without you doing anything. So when would be the best time to exit that position for a potential win or even for a loss? Well, remember, in these Bitcoin ETFs, price is everything. There are no earnings. So you really want to focus in on price. That's one really nice thing about trading these ETFs, is that that's really all you have to focus on. That means you need to know and understand price movement, understand how charts work, understand how candlesticks work, understand what the market's trying to tell you by the way it's moving. So for example, when would I say, well, I'm wrong if I bought a call option because I don't want to sit in this thing to expiration? So we have a couple of support areas that if they're broken, you might consider getting out of it. The first one is this diagonal support. We have really nice, clearly defined diagonal support right in here, and it closed right at it on Friday. But another one is this support right in here. This waves high right in here, that's another support area. If it broke through this diagonal support, broke through this horizontal support, then it might be time to get out. And you might want to give it a little more room to run, maybe to the support just below there, maybe down in here around $57 or $58. But once it broke through diagonal support, broke through horizontal support, or two of them, at that point, might be time to close that call option out. Now, if you're prepared to lose the whole thing, then you can let it ride if you decide to do that. But personally, if I'm going to buy an option and have time decay working against me, I want to have technical analysis working in my favor. And right now we do. Right now it's back at support. We'll have to see if it bounces off this next week. If it breaks through that technical support and I bought a short-term call option, I'd be out of it. And that's why I like doing cash or put options. Because you see, even if it breaks through that support, I'm still over 10% out of the money. I have to get all the way down here, around $50 per share, so I have to break through another support here, another one here before I'm challenged. And that's why I like trading these cash or put options. Typically what I'll do in a position like this, where it has a potentially good, strong, big bullish move, is do a risk reversal, where I sell a longer term put option. I use that capital to buy a longer term call option. And I meant to do it in this, I just forgot. So I did miss my opportunity. Maybe I'll get it if it comes back down. But by doing a risk reversal, using the premium from the put option you sold to help fund buying that call option. In that case, theta's not working against you, it's actually your ally, because I always enter those for an overall credit. So if it comes back down and technicals still look good, I'll probably look to do a risk reversal. If you'd like to see how I build these positions step by step, check out the benefits of becoming a patron down at the link in the description below. As you see here, Deborah, she's one of my viewers here on YouTube, asked for some help when it comes to options trading. If you'd like to see some tips and just some general knowledge that every beginner option trader should understand and know, check out the video at the link above and the description below entitled The Only Option Trading Video You Should Watch as a Beginner. Until next time, happy investing, and we'll see you again soon.